Today, we're diving into a really powerful idea from Morgan Housel's The Psychology of Money. It's called the tail event. And I'll warn you, this might just completely change how you think about success and failure. So let me just start by asking you a question. What if being wrong, wrong most of the time, wasn't just okay, but actually a totally normal and even necessary part of getting to where you want to go?
And what if your biggest successes didn't depend on getting a bunch of small things right, but instead, everything came down to just one or two massive, game-changing wins?
Well, this pretty counterintuitive idea has a name. Morgan Housel calls it tails you win, and it's a really fundamental principle for understanding how wealth is actually built. So what in the world is a tail event? Getting your head around this concept can save you from so much frustration and self-doubt, and it can help you avoid some major financial mistakes that people make when they're just focusing on the wrong things. At its core, Housel's idea is incredibly simple. It's that the impact of a few huge successes will always outweigh the sting of a whole bunch of minor setbacks. The size of your wins matters way more than how often you win.
Okay, so let's get the official definition down. A tail event is a rare, super unlikely outcome that's way out on the extreme end of what's possible. It's in the tail of the probability curve. But here's the kicker. When it does happen, its impact is so enormous that it accounts for almost all of the results. And in the world of finance, trust me, these events explain pretty much everything.
Now, I know that might sound a little abstract, so let's bring it down to earth with some real-world examples. This is where you can really see the power of tail events in action. Just think about the stock market for a second. It's kind of shocking, but when you look at all the public companies out there, a tiny fraction, we're talking maybe 5%, maybe even less, are responsible for almost all of the market's gains. So what about the other 95%? Well, they pretty much underperform, go bust, or just tread water.
So here's the takeaway, and this is huge. It means you can be wrong again and again. You can pick dozens of investments that go absolutely nowhere. But if you manage to find and hold on to just a couple of those massive winners, you can still come out way ahead. Your entire success can literally be driven by a handful of right decisions.
And if you need more proof, just look at the most famous investor of all time, Warren Buffett. His entire career is basically the ultimate case study in the tails you win principle. You see, a massive chunk of Buffett's legendary success at Berkshire Hathaway doesn't come from hundreds of clever little moves. Nope. It comes from a small handful of absolutely incredible investments, companies like American Express, Coca-Cola, and See's Candies, that he found and, crucially, held on to. And that really shows the other key ingredient here: time. He didn't just pick these winners. He held them for decades, letting them compound and grow into these massive tail events. Honestly, the rest of his portfolio could have been just okay, because these few big wins were so powerful, they made almost everything else irrelevant. So you might be thinking, okay, if the strategy is that simple, just find a few big winners and hold on, why isn't everyone doing it? Well, the answer has everything to do with our own psychology. The idea is simple, but actually doing it is not easy. Here's why we mess this up. We're just wired to want to be right all the time. We get so discouraged by all those small, frequent losses because we get confused. We mix up how often we're winning with how big those wins are. We see every little loss as a failure instead of seeing it as just the cost of admission to stay in the game long enough to find that one big win. A simple analogy from baseball makes this totally clear.
Okay, think about a Hall of Fame baseball player. The best hitters in history fail to get a hit 7 out of 10 times they step up to the plate. A 30% success rate makes you a legend. Why? Because success isn't about getting a hit every single time. It's about the power of the hits you do get. A few home runs matter more than a dozen little singles. Investing, it's the exact same game.
Okay, so how do we actually apply this to our own lives? It really boils down to 3 simple rules for putting the power of tail events to work for you. All right, rule number 1. Stop expecting success to be a nice, smooth, straight line. It's not. Real success comes in big, lumpy, unpredictable bursts. Number 2, you have to be patient. Seriously, the biggest mistake people make is selling their winners way too early to lock in a small profit. You've got to give them time to grow into those massive tail events. And third, diversify. You can't predict which idea is going to be the one that explodes, so you need to spread your bets to give yourself a better chance of catching one. See, this totally reframes your goal as an investor. Your job isn't to be a perfect stock picker who never loses. Your real job is just survival.
It's to manage your risk and just stay in the game long enough for those incredible game-changing wins to finally make an appearance. And this isn't just about money or stocks. As Housel puts it, anything that's huge, profitable, famous, or influential is the result of a tail event. Think about it. Blockbuster movies, best-selling books, huge tech breakthroughs. It is a pattern that you see everywhere. So the most important takeaway here is how this should change our relationship with something we all dread, failure, especially when it comes to our money. The old way of thinking tells us that every loss is a failure and that we have to be right all the time. But the tails you win mindset shows us something different. It shows us that losses are just the price of admission. They're the fee you pay to be in the market with a chance at those spectacular returns. It teaches you that you don't need to be right all the time. You just need to be really right on the few occasions that actually matter. And that really brings us to the final thought. The goal isn't to win every day. It's to set yourself up so that when those big opportunities come along, you're there to grab them. Because in the end, you really don't need to win often. You just need to win big, occasionally.